Hello everyone, this is Juan Sarmiento and today is Tuesday, February the 25th. I'd like to suggest that you go to Put Gold Genie and on the tutorials go to free videos. If you are not subscribed as a visitor, you will be given the opportunity to do so. And once you register, you will be able to see my free videos. And I want you to take a look at this particular one, Traders Expo 2017. In this video, I described my targets back then in November 2017 for the S&P 500. That target has been met, which means that we are in a longer term bear market. So please take a look and make your own conclusions. I don't want to convince you one way or another. Just look at the information and take it with a grain of salt. This is not a science, it's more like experience and what you are used to, okay? It's an Elliott wave analysis of the S&P 500. I believe that we are at the beginning of a bear market, and I want you to be aware of that, okay? It is important. Okay, let's take a look at our account. I'm going to go first to the account statement and scroll down all the way down, and you can see now for the year we are up $3,230, and for the entire account for the since the opening, we opened the account at $30,000 just for ease back in November, I believe, or October perhaps, you will remember, and the account is now up. For the first time, we are in the black. Good news, and this is because my approach, as I always told you, it is about being a contrarian. So finally, the market corrected, and that correction made my trades profitable. I have a lot of trades, as you can see, and many of them are not positive. Okay, so that's what happens. That's normal trading. And you know that by the end, perhaps the end of the year, in balance, you should get ahead. And so we are ahead only $2,000. Okay, so that's close to what, 7%, something like that. Okay, so let's take a look. I don't have any new trades today, so let's go to the account activity and positions, and you can see that I closed some trades and I opened some trades. If you want to see which, click on this little icon here to close this column here, and then you can see clearly the trades that were to open and close, open and close. Okay, so we close one ADM. Let's take a look. Analyze trade. And yes, indeed, it was taken out. You can see what the profit was going to the monitor tab, account statement, and perhaps we can go by symbol here. ADM, yes, $249 year to date. Okay, depending on whether we started, yes, we started this trade. I don't know how far back, so let's go and take a look, perhaps 50 days at the most, I would think. Yeah, this is for the entire year. Okay, so this $249 is legitimate, all the entire trade. Or you can take a look, click on the entry, vertical here and say right click and say analyze trade, and together will give you the profit, $249 for the entire position, entry and exit. Okay, that's how you know whether you have a winner or a loser. Okay, then we open 3 trades. Obviously they opened. How soon after opening? Well, it says 6:36, 6:31 and 6:31. That means right at the opening, which is a good thing because the market declined thereafter. Okay, so let's take a look first at this DHI, analyze trade, and just click on the plus sign and that gives you, wow, that was a big move. Okay, from 61 thereabouts to 58. Okay, let's take a second look here. KBH, analyze trade. And once again, just click on the plus sign and then we have the actual price, and here we are. Very good position. That's where you want to be. And Costco, analyze trade. Click on the plus sign and good as well. Let's take a look at the chart. Yeah, big move on Costco. All right, very good. That's the way it is supposed to work. All right, so the next step is, do we want to close anything? To do that, click here on the P&L, all right? And look at the P&L that is close to 100%. Okay, so sorry about that, it was an interruption. So we have now the P&L close to 100% profit. Okay, so that means we're very darn close to the maximum. So let's take a look at MU in that order, okay? MU. And because I have 50 days or more, it gives me the open trade. And then I can right click and say analyze trade. Do I want to close MU? Okay, you have to look at a couple of things. How long before this expires? And the expiration is this Friday. Do you believe that the stock may move into losing territory by the time expiration comes? In other words, can you have a big spike in the opposite direction? Perhaps the chart will give you a tip that, oh yeah, that's sort of unlikely, okay, still bearish or whatever. You make your own conclusions. I'd say I'm willing to stay with it for a couple more days and perhaps get out early. Or then you might say, well, how much money really I'm making by taking that risk? And you put your cursor here right at the current price, and you see that over here it tells you what the maximum profit is and what the profit is already. So you say, okay, the maximum profit is $310 and I have already $283. So you say, okay, is it worth waiting for $30 more? Perhaps you want to take the profits and run and not be concerned with that. Well, one thing that you can do is set the slices to the break-even point and select the expiration. And you say, okay, change this here to February the 28th. And then you see that the probability of making any profit is 95%. But that's not what we want, because that will be a loss from the profit we have right now. Okay, so move your cursor to the band here and it says 88%. So if you think that in the next 3 days the stock will not rise above 56, and you say, yeah, chances are that's going to happen, and I get $30 just to sit tight and not doing anything. Okay, so that's the decision, right? We might reconsider it tomorrow. Okay, let's go back to the monitor tab, and what is next? Nike. NKE. And this is a short vertical spread, short call spread, which means is bearish even though it's short. Let's say analyze trade, and to see where we are, set the slices to the break-even point, change the date. It is also expiring in a couple of days, and just add one more slice right there. Okay, so it is trading at $93 and my maximum profit will occur at 99.8 or less. I would say 100 or less. Okay, and the chances of that are 90%. Okay, so let's take a look at the chart. Yeah, we're way down here. It's unlikely that it will go to 100 in the next couple of days. So I say would I get out? Well, yeah. How much more are you going to get? $5 more? Perhaps you say not worth the risk, or perhaps you say who cares? We're over there. The calls are both going to expire worthless, so we don't have to really spend the commissions. It's really pennies what we're contemplating here. All right. So make your decision based on what you think is worth it. Sometimes, if you think the market is rebounding, that will make you nervous enough to get out of the trade quickly. Right now, it feels like we're comfortably on the way down, comfortably bearish. Western Digital, also very, very nice, let's say, analyzed. Let's look at the chart there. Oh, first, let's go change here, Western Digital. It looks cool. It's another call spread. And we are down here. Our maximum profit is here. When does it expire? On Friday, so 3 days to go. And it would have to move from 59 to over 66, 67 for me to not get my maximum profit. How much is the difference here between what I have is $15. Okay, you make your decision based on that. $15 plus whatever the commissions will be. If I were to close this analyze trade, I'm sorry, analyze closing is what I mean. Analyze opposite. That gives me the closing trade. I would have to pay 8 cents, where in all likelihood they would expire worthless. So the 8 cents here is something I have to pay. Okay, so create duplicate, confirm and send, and that will tell you here how much more money do you pay just to get out of the trade. No, $24 plus $4, 3.99 in commissions. It turns out $27. Okay, and then you say I wait $2 more and gives me $30. Perhaps it doesn't matter, but you make your own decision here. I'm so comfortable to the downside that I don't really need to be too concerned about. I just want you to know that these things are issues that you need to consider. MasterCard, MA, same thing. Okay, this one though, this is a little later, March 6th. So I believe it's the week after this one. And in this case, the stock is trading at 303 and my band here is at 314. And we have until next Friday. So we're talking about now 10 days. Okay. This will be more wise to close. So let's just do that, okay? Pay 20 cents just to get out. And imagine that the stock could bounce, and even a simple rebound of the market, even if we still stay bearish, could happen, okay? So let's get out of that one. Lock in my profits. Yeah, another thing that you can do is rollovers. If you think the market is still going down and you want to stay, you can always do a vertical roll. We'll see if we run across something that will be interested in doing that for. LRCX. Yeah, I know that it's taking a beating now. Go to the monitor tab. LRCX, there it is. And this is a put spread, so it's long, obviously. And we are here. And this is April 3rd, so that's further away. Okay, we have a month to go. And I say, okay, how much more? $40 to stay in this trade for a little longer. I would say get out. Because it's a lot of time for too little money. You can Perhaps if we had some kind of formula, how many days are you willing to tolerate and how much money per day would you get? Okay, all right, let's do that. Why don't we do that? Analyze trade. Okay, so how much more money would we make if we stay put, if we keep that trade? Well, right now it's 281 or 282 to, I'm sorry, 181 to 280. So that's about $98. Let's say 98 to round it up. And the expiration here of April 3rd is 38 days. So $98 divided by 38, that's about $2.50 per day. This is something we would say, well, it's too little, too much, whatever. It makes sense, doesn't it, to make that calculation, but so I'm simply gonna get out of that for a $2 credit. Okay, let me see if there's any others. Cigna, now that's 76. CI. Okay, this is a diagonal and that's due to expire. See, February 28, February. Ah, so you see the February option expired. That's interesting because the February option expired, but the February 28, the February 7 option expired worthless, but the February 28 is now well in the money. So it's a plain put. Okay, now we have a plain put. It's not a spread anymore. So in this case, you want to get out because the volatility is high and it could reverse and get lower very quickly. So let's get out of that. That made me good money. Or you could sell it. Let's say we had this option for one more month. You could sell the 200 puts if you wanted with the same expiration. But since it's so close, I would just take my profit. Otherwise, you will get a sign and it will be 100 shares short. PayPal, PYPL. There it is. Okay, this one expires March. Let's do the same calculation, wouldn't we? Shouldn't we? Let's see. The profit is, let me just, is the maximum profit is 320 and we have profit of 205. So we would make $115 more if we went all the way to expiration. And that expiration here has 31 days to go. And so there is a lot more money here. It's almost close to 4. So you see, $4 a day is not too bad. So let's keep that. Look at your chart and see, well, does it look like it's going to go lower? And I think it is, so I keep it. Procter & Gamble, PG, and I think I may have a put on that one. Yeah, let me see. Oh, it's a vertical spread. Okay, now this is part of an, yeah, now I have these puts that are being very close to the money. It's March 20, so yeah, let's keep that. It's almost becoming profitable. Once it becomes profitable, then we can do a number of things, okay? It's very, very close to profitable. And it says 52 here. And that's confusing because we did have an assignment at some point, so let's just ignore that. XHB, I have a lot of home builder associated trades now that I think about it. Okay, this is March the 20th. And we are here. 4602. I'm gonna definitely leave it alone. It looks like I just made a big bar down. It implies that something further is gonna happen. It's not slowing down yet. Okay, Costco, that was yesterday's trade, and everybody else is just very small percentages, so we're gonna leave those alone until the percentages become larger. We have only one bullish trade with right now open, which is UNG, and that's the single loser here for the day. In fact, every other trade are winners. So all of a sudden we have all kinds of winners. This makes me think for you to consider that if we had just plain long puts, would it have been better than having all these spreads? You get with these spreads the impression that you're going to get a better probability of success than if you bought the put. But if you have predicted that the market was going to go down and you have nothing but put, our profits will be even larger. Think about that. And what do you think? Put your comments below. What is better, to trade long puts or to trade the vertical spreads? What is your expectation? Why would you rather trade? Leave those comments below. I'd be glad to discuss that with you. So thank you very much. And that is all for today. And this is Juan Sarmiento, and see you tomorrow. Bye-bye.
For this video. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.putgoldgenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.